Hello, in this video we're going to cover currency correlations and their practical use in trading. So, you've probably seen in my other video that I am covering a wide range of pairs and I classify them in USD, yen, pound, and euro. And usually from those four, I'll trade just one pair from those four categories. And the reason I do this is if I analyze all of these with the dollar as the main currency, I would be overexposing myself to the same idea if I were to trade all of them. So I usually like to get a feel for what the dollar is doing by analyzing multiple charts. It doesn't matter the type of technical analysis you use. It's just whatever you use will tell you, it'll give you a hint to where it's going, and then you need to check other charts that are related to the currency pair that you're considering trading, and you'll find clues. For example, this is the dollar. For example, like I'm believing the dollar is going to come up into my zone here. I go by the Elliott wave principle, and if you're familiar with it, great. If not, don't worry about the technicals. Just this idea, currency correlation, works for any type of technical analysis. So it's just based on observation. So I'm saying it's going to come up into the zone eventually over the long term. So, there's corrections and there's impulses, and a lot will take place before we get here. So if we want to trade a US dollar pair, let's say pound, for example, I put out last week that it's going to come into the zone and we're going to reverse up here. Yes, it's very possible, and we had a really nice reaction to the zone, and it might be a nice buy. I have an alert here. If it starts breaking the top here, I will take another look at buying it. But if you talk about currency correlations, let's see what the other pairs are saying. USD yen, I have coming up and then coming down one more time for a push around this size. So, if I have this coming down, that means the dollar would probably have a correction, meaning the dollar would come down a little bit before it eventually comes up. So that doesn't correlate with my idea here on pound. So you have to look at probability wise, like if this keeps going down, which it could, the yen will, it'll go down. So which one is right? So you kind of have to look at other pairs to see what's going on. So let's take a look at AUD. That is just on a big time frame coming down into our zone, and I believe the one that will tell us something is USD CAD. USD CAD, we have a structure that's been completed. We have in Elliott wave 1, 2, 1, 2, and a push upwards. So this structure here looks very corrective, and I do believe we're going to have more upside on the dollar pretty soon within the week. So given my bias, I'm saying that the dollar most likely will be bullish this week. We're just undergoing a correction in the moment. So what does that mean for pound versus our yen pair? That means this pair has a higher probability of having a deeper correction. And then the pound idea means that this will come down even further. So these are not directly correlated where they completely control each other. There are many other factors since they're representative of countries and economies. But what I'll do is, I saw a good reaction here. If it starts breaking the top of this, I may enter. And then if I enter, as soon as I get, a few pips in my favor, I'll put my stop loss at break even to protect myself. And then here, if we come up in the zone, I'll sell, and if it goes in my favor, I'll protect myself with a stop loss at break even, and I'll see what happens. It doesn't. You're not wrong if you trade two opposing ideas, because that means you're going to be right on one of them. But a good entry and being able to protect yourself shortly after you enter cancels out the possibility of risk. So even if I get stopped out on one of these trades, one of them will work out and I will make, a decent profit. This is around 300 pips. This is over 300 pips. So, you don't have to always be correct in Forex. You want to expose yourself as much as you can and protect yourself as soon as possible. And it's just up or down. So use these type of things to help you in your trading and go by patterns. You can see the same thing on euro. All the charts are indicating a euro bear. This is a correction. This right here, I believe that this is a correction and it's going to drop around these levels pretty heavily. And then euro odd, we're in a very critical zone here, so that will probably reverse this chart. So you just take a look at which one looks the best for you, for a swing trade or a day trade, whatever you're going for, and then just look at everything else for correlation, but just trade the one that you prefer. So this might be a really nice day trade. When it starts breaking down, you can sell it, catch 60 pips, get out within a day or two. And then for example, this trade might be a great example of a swing trade. It starts breaking down, you sell, you protect yourself as soon as possible with your stop loss at break even, and you hold the trade for, a month or two, and you have a very nice profit. So that's how I use currency correlations. And in the coming videos, my weekly analysis, think in terms of that. You don't have to trade all of these. Just look at a really brilliant pattern. If you're going for a swing trade or a short-term trade, choose your pattern, look at everything else, get a good entry, protect yourself, and make money. So I just wanted to share that before I move forward with my weekly analysis, because it gets a bit confusing. If you think that I'm trading all of these, I'm not. I'm only trading about 3 or 4 charts. So thanks for watching, and I hope you get something from these videos.